Welcome to Finan Simple, where money is made easy, and let's travel over to China. Videos of protesters in China demanding their bank accounts frozen funds are widely spread on the internet. A bank run is risky. People will hurry to withdraw all of their money from the bank as soon as they discover it is not safe, which will cause other reliable banks to run out of funds as well. But that only tells one part of the story. The catastrophe that China is going to face will be considerably more severe than you could have ever imagined. The 2008 housing meltdown, in which big companies like Lehman Brothers failed, thousands of people lost their homes, and the world economy collapsed into a recession, is going to happen in China. The main distinction is that, if anything, China's housing issue appears to be headed for a considerably worse outcome, a housing disaster on steroids. Here is a quick background on China's economy. Since 1960, China's GDP had been barely expanding up until the 1990s, but it suddenly took off at the beginning of late 1990s. By 2021, it will have increased from $500 billion in 1994 to about $15 trillion. In the history of the contemporary human race, that is likely the quickest economic growth. It nearly sounds like a miracle. However, not everything is happy and rosy. There is a grim aspect to it, hidden under glitzy statistics and sparkling structures. The real estate market was a significant contributor to China's GDP. It generates a third of the nation's economic production and makes up 13% of the GDP. This comprises businesses that manufacture white goods for apartments, rental and brokerage services, housing, and businesses that provide building supplies. The only issue is that China has constructed many more homes than it needs, which has caused a bubble in the industry. China has at least 65 million unoccupied houses, which is equivalent to half of Russia's population and the whole population of France combined. But why did China construct 65 million vacant homes? How did China come to be the source of the largest housing bubble ever? How is it finally on the verge of collapsing and bringing down the entire global economy with it? Let's find out. When you wish to invest in the United States, you have a variety of possibilities. You may invest in government bonds, real estate, and the stock market, or at the very least, put your money in the bank where it will earn interest over time. You can even start investing in real estate with as little as a few dollars. You don't fear that the government would swoop in one lovely morning and take the CEO of the company because he said something negative about the president or the ruling party. The S&P 500 has grown at an average pace of 10% for more than a century, maintaining the stock market's stability. Since the US has never defaulted on its commitments, US government bonds are regarded as the safest investments in the whole world. The United States' reputation for dependability and accountability spans many generations. However, not many nations are like that, particularly China, where the government very much controls everything. There is the good fortune of openness and liberty. CEOs who don't agree with the ruling party may vanish overnight, and their business may even be destroyed. Even if you're the richest person in the nation, nothing would shield you from the wrath of the government party. In China, even the common citizen is aware of that. Therefore, few people are ready to take on the risk of buying government bonds or shares. Everyone in China turns to real estate as a result. The bottom line is that you can't merely save money. In China, where the individuals save far more than in the United States or almost everywhere else in the world, you must invest it. In China, second house buyers outnumber first home buyers by a wide margin, while third home buyers are virtually as numerous as first home buyers. In China, purchasing real estate is your best bet. China is also cut off from the rest of the globe. You can say that real estate is your only choice because the ordinary Chinese person has no access to the US stock market, and finding a way to send money out of the country is difficult. Real estate, which is currently in the midst of a bubble that is about to pop, was largely responsible for the unheard of GDP increase. Due to this, real estate prices in Shenzhen and Shanghai have surpassed those in Los Angeles, even though China's GDP per capita is $10,000 while the US's is over $60,000. The market will undoubtedly tumble if these 65 million properties are posted on the market tomorrow, but the economy won't be affected since China is simply too large. Nearly 5 times as many people live there than in the US, but that just makes up a small portion of the issue. When a builder in China plans to construct an apartment complex, the developer starts selling units before construction even begins on the building. With that money, the developer begins construction on the remaining units while simultaneously selling the existing ones. In the end, it frequently takes years to finish such a job. However, due to the expanding economy and the millions of individuals who are purchasing homes, The project's completion is eagerly anticipated by the Chinese developers. They thus begin construction on new apartment buildings using the money from earlier ventures in the expectation of eventually selling them. The money from the second project is used to launch other projects while the next one is being built. The builders may easily take out loans if there aren't enough money to start new projects. Since the loans will be secured by actual residences that are in high demand and whose prices are on the rise every year, banks are more than delighted to make them available. They can easily sell the units to cover the loan balance if necessary, therefore, there is no chance that they would ever declare bankruptcy. Developers continue to make big loans to pursue the construction, and people continue to take mortgages to buy houses. Sounds similar to the 2008 housing stint, right? This tactic only works when everything is expanding. People earn money and continue to purchase properties while the economy is growing. What transpires, though, if the economy stops expanding? What happens if individuals are compelled to stay at home due to a virus, yet are no longer able to earn enough money to purchase new homes? Evergrande is the easy solution. People's constant expectation that things will continue to expand is so peculiar. Humanity is pitiful, to put it mildly. Then, the unthinkable occurred. COVID-19 made its big entrance. The Chinese government instituted a zero-COVID policy, mandating that everyone get vaccinated and stay at home for the duration of the outbreak in order to finally eradicate the virus. Thus, the Chinese developers started to fall apart. The developers were unable to complete the hundreds of apartment projects that they had begun before the epidemic because people stopped purchasing homes, which caused the money to stop flowing in. Evergrande was the first significant developer to start missing payments on its debt. It ranks as the second largest real estate developer in China and the 122nd largest business globally. Its only hope, with over $300 billion in debt, was a government rescue. Due to the delay in home building, many people stopped paying their mortgages, escalating the issue. Loans totaling more than $220 billion have led to incomplete projects. The Chinese government provided $148 billion in loans to support the real estate investors. A payment holiday may be granted to mortgage holders without having an adverse effect on their credit score. Since it was boosting yearly GDP estimates, the government was well aware that the bubble was developing. Now, however, it is making every effort to pop the bubble without causing an economic collapse. Will it be able to do that? Only time will tell. There is, however, a far greater issue. The housing market has lost the public's trust. People will now view real estate as an unreliable and speculative asset as well, which means there won't be any more 7 or 8% GDP growth moving forward, just as they did with the stock market and government bonds. That doesn't necessarily imply that people won't continue to buy homes, but the pace would be significantly slower than it was before the epidemic. The crash may be even worse if the bubble bursts, like it did in the USA in 2008. Second, if it occurs right away, the world's inflation would only worsen since, in the first place, the epidemic is still ongoing, the US is struggling with excessive inflation, an impending housing crisis, and an inability to cut interest rates. Therefore, the effects of the Chinese property catastrophe may cause the world economy to experience a depression, or at least several more years of recession. Always stay focused on learning and developing discipline. Get educated, make a plan, and stay the course. If you found this informative, smash the like button, please share it with a friend, comment down below, and let us know what would you like to have made Finan simple next. And definitely subscribe so you don't miss new content. Keep your head up, ears open, and always search for knowledge. See you soon!